Good afternoon. In this video, we're going to go over this past week's trades and the weekly recap. Before I get into the recap, if you're not in the room, you can find the link in the description of the video and in my bio section of social media accounts. Also, please like the video, subscribe to the channel if you haven't done so already. Now, this past week, I finished with, 21 wins and 2 losses for a win rate of 91.30%. Definitely happy about that. Anything over 85%, I'm still happy with. That's going to be continually to be my weekly, monthly goal is 85%, even though I've been farly exceeding that. But that's just the measuring stick I like to go by, and I will continue to go by it. So with that said, you have to bear with me. My voice is acting kind of weird today. I don't know why. Probably coming down with something or allergic to something. I don't know. But anyways, let's see. Trade ideas room on the 30th. I said SPY puts under 401.50. Let's see. Is this Monday right here? Yeah, I said what? 401.50 puts, which is right down here, lower day in pre-market. And we were up at 408, and we had a nice little drop from what, say, we closed what, 405, $3.50 drop. So, but we didn't drop, and I didn't get below this area, so we waited for the first 10-minute candle. First 10-minute candle to form. Then I didn't take puts. I didn't take calls right off the out of this. I don't know why I didn't. I don't remember why. I hesitated on this play on Monday. I did not take calls. I should have. Really not quite sure why I didn't do that. But anyways, I did take puts at 10.15, which is right here. It popped up, went to the RCT trend line. You can see it was support right here. Now it's resistance, rejected here. That once it made a 10-minute candle, a red 10-minute candle, and got below this 404. We'll just say 404 area. Actually 404.25. Once it got below that area, I grabbed the 40-45 puts at 760, and they went from 760 to $11.90 in that drop right there. Then I grabbed calls at 1058, which is right here. Yeah, 1058, which is not right there. No, this candle right here. So it had these nice red candles right here. I got bought at pre-market. So once it broke over this 402.90 area, which is this big green red candle right here, a hammer candle right there, I did take calls. I took the 40-50 calls at $7 and $7, and they went from $7 to 10.50 in that push up there. Then we ended up rejecting the 200 EMA, which is the purple line. It shot right through VWAP. This is what it's been doing a lot lately. So when it gets to VWAP, it just steamrolls right through it. Doesn't even act as resistance, doesn't act as support anymore. It just goes right through it. But I did take puts again at 1137, which is right here. For some reason I waited down here, but I get why I waited down here. You get this big green candle through VWAP, rejected 200 EMA, it flushed down, came back up through VWAP again, it came back down. But when it actually broke below this 402 area, 403 area, this is where I ended up grabbing it. I grabbed the 40-40 puts at 870, and they went from 870 to 1370 right there. So a nice little play right there. Then I took puts again, the same 440 puts. I took them at 1226, which is right here. As you can see, we got the drop right here, got bought back up at the 402 area, lower day, came back up to VWAP. Actually, this time at VWAP, it rejected. Then when it came back down, broke below this 226. Yeah, broke below this 402. We'll say 950 area. When it broke below that, that's where I grabbed the 440 puts again at 930, and they went from 930 to 1140 in that drop right there. Then I switched to calls at 122, which is right here. This is, I remember this right here. It kept getting bought at lower days. We had this big green candle right here, shot right back up to VWAP. I thought for sure we were gonna blow right through VWAP, but it didn't happen that way. It just got rejected. So I took the 440 calls at 850, and as soon as I get in, it just dumped on me, and I took a loss on that. So definitely not happy about that. And then I took 40-20 calls at 335, which is right here. Once it got over the 401 area, that's where I ended up grabbing it. I grabbed the 40-20 calls at $7, and they went from $7 to $9. Now, at the end of the day, what's been happening is that the end of the day we'll have like a fake drop, then it will pop like it did right. No, it didn't do it there. Right here, did a fake drop, then it popped. That's what it's been doing at the end of the day. Right here, fake drop, then it popped. Yeah, same here. Fake drop, then it popped the last 10 minutes. This is what it's been doing almost, and popped the last hour or so right there. Started to drop a little bit, then it popped. I mean, I can continue to show this right here. It didn't do that, it actually dropped. But more on it dropped here. Going back too far, it dropped and it popped a little bit, but getting too far away from. So when it was dropping down, so when it was looking over the 401 area, so when it got over the 401, that's when I decided to grab calls, and that's why I took the end of the day play right there. So they did go from what, $7 to $9, so got a nice little $2 play end of day right there. So finished the day 5-1. Can't complain about that. Definitely pleased about that. Probably could have done away with not taking that loss, but I mean, 9 out of 10 times when it drops and quickly gets back up to the area like it did right here, it's usually going to push through. It just is that one time where it didn't do that. So I probably would have taken that again. That's a loss that I probably would have taken either way. Just, it's part of trading. You're going to take losses. No one's perfect. You're not going to be right 100% of the time, no matter what you're doing. That's just the way trading is. You're just going to learn to adapt to it, adapt to the conditions and what's happening in the market. Makers like to play little games and stuff like that, so just going to adapt to them. So yeah. Now on to Tuesday, which is what, the 31st. Yeah. Traded his room. SPY calls over 402. 402 is right here. It dropped down. It came back up. So I made the first 10-minute candle was green, so I took calls over the first 10-minute candle. Even the 402 wasn't there, I still would have done it anyways because I was looking at the call side. So I grabbed the 40-50 calls at 860, and they went from 860 to 1040 in that little push right there. Then I switched to puts at let's see, 1001 right here. This is news dropped. I don't remember what the news was. Let me just trying to see what the news was on that day. 10 a.m. Consumer confidence. That's what it was. So consumer confidence dropped, and I thought we were gonna. It started to dump. So once it broke below lower day, that's where I grabbed the puts. And they came in hot, I believe. I have to look at it again. I'm sorry, I'm so disorganized today. Yeah, they came in low. They were expecting 109.1. We came in at 107, so it came in bad. But yet, the market did a fake drop. And then it just popped. And I grabbed the puts right here. I stayed with it, and then I ended up averaging down at 1039, which is right here. Now I initially bought the 40-10 puts at 730, and I think I sold some. I'm not 100% sure. I think I sold some in the drop, then I ended up holding some, but I ended up averaging down at 240, making my new average 365. And I averaged down right here. I'm not quite sure why I averaged down right there. What day is this? Let me see. I'm just trying to look. Previous high day, what was that? Was that previous high day? Was this pivot right in here? Oh, it's resistance right here. So 403 is where I decided to average down. Yeah, 403 is where I decided to average down. There's some resistance right here the day before, but oops. Sorry, I'm so disorganized today. I don't know why, but let's see. Yeah, average down right here. Like I said, I had 730, added more 240, making my average 365. Started to drop a little bit, then it popped, and I just ended up getting out of it. I stopped out at like 2. I just said enough with that. Plus, I was so far out of the money that it's just not going to work out. So I just waited. And I did wait, and I ended up taking puts at 1149, which is right here. You get all these candles right here, consolidation candles right here, pops higher day, fakes out, drops, pops back up to higher day again, fakes out. So when it gets underneath this 402.85 area, that's where I grabbed the 440 puts. And got the 440 puts at 820, and they went from 820 to 990. Not much of a play whatsoever. Just the thing was just slowly grinding up all day long. Then I decided to wait. 1149, okay, which is right there. I didn't take anything from 1149 to 312. Just kept grinding up, grinding up, and grinding up. And at 312, I took right here. See, it just keeps grinding up. But once it broke below the 404, I think I took it right here, more or less down here at the 404.20 area. I grabbed the 40.55 puts at 490, and they went from 490 to 730 right there. So I had a nice little drop right there. Then I switched to calls. This is what I've been talking about, fake drop, then a pop. I switched to calls when it got at 337, which is right here. Right when it bounced back up. Came to close to higher day. This is where I grabbed the 40.55 calls at 430. And they went from 430 to 2170, so that ended up being a 400% move right there, push into play. This is what I've been talking about, that it just likes to do a fake drop and a pop end of the day, and it did it here. Okay, we saw that one and grabbed that one right perfectly. So bounced off the 20 EMA, went underneath it a little bit, but it quickly got bought back up. And then when it started to go towards higher day at the last 30 minutes of the day, to me it was a no-brainer to grab calls. They were going to push it, and that's what they ended up doing. So they just pushed it more, and so that was a nice end of the day play on that. Now on this loss I took right here, I probably should have just dumped it, but I think one of the reasons I held on to it was because the consumer confidence came in really bad. That market should have never done this, but the market doesn't care. It's going to do what it wants, and that's just part of trading, because the market just does not make sense half the time. And when certain things are supposed to go a certain way and it just ignores it, it's kind of like a head scratcher. But it does this all the time, especially during COVID. Just bad news is good news, and good news is good news. So the market was just reacted negatively towards this consumer confidence and just grinded up from it. It just liked it for some reason. So it is what it is. So now on Wednesday we had FOMC. I didn't touch it because I just don't like playing before FOMC. First of all, if Powell's speaking, it's very, very, very expensive. The SPX options were like $20 plus, and I'm not touching those, except for I probably should play them in the morning on days Powell's not speaking, because it's really not that expensive. But days Powell is speaking, I totally ignore it. I don't even touch it. I wait till 2 o'clock or 1:45 to start planning my play. And this one I took the I took the SPX Strangle Player 4,000 puts at 650 and 4110 calls at 670. So it popped up. Actually, it dropped first. The puts went from 650 to 760. Then it popped back up. And those calls went from 670 to 1850. So it was very, very weird. This FOMC, it dropped, it popped back up, then it dropped again. Looks like it was going to break lower day, and it just raged. So it just went crazy. So the SPX play for FOMC was a good play. It just took a lot of patience. I know that I ended up selling like half here and half there, and held some here and held some there, and it was usually you just get a fake drop because usually the first move is the wrong one, and you sell into the first fake move, then you hold for the real move, and it just ends up going. But this time it was a fake, a pop fake, then a drop fake. It was like 3 fakes in a row. You get a drop fake, then it pops, and a pop fake. Then it drops again for another drop fake, then it pops again. It was just very, very, very confusing. I haven't really seen something like this in a while. Usually it just drops and it'll just pop, or it'll pop and it just drops. You don't usually see this drop, pop, actually. Again, this is very, very unique to see, and it was kind of winging it as I was going along. It was hard to predict. It's hard to predict when it does stuff like this, but I was definitely favoring the call side more than anything, because it was all going to hinge. They did 25% rate hike, and they just was all going to be focused on what's going to happen down the road. And the market liked what Powell was saying and just went nuts. So then the other play I took was I took calls at 330, which is right here. I didn't want to chase this. I liked that it pulled back here. And this is the one thing about FOMC you got to worry about. Everyone's trying to, with FOMC, you cannot try to guess the top. You cannot try to guess the bottom. You can't knife catch, because there is no bottom or no top on FOMC. It's just full-blown FOMO. And when you see candles like this, it's raging and raging and raging. Then when you get this red candle, everyone's jumping in on puts right here. I know better, because this is what they love to do. They like to rage it, give it a nice little red candle to lure everybody in to think, okay, the top's in, it's going to exhaust, it's going to drop. And sometimes it does, but this time, most of the time it doesn't. It's a huge trap, and they pushed it more. So once it broke over this 411, 70 area, that's where I grabbed the 4130 calls at 720, and they went from 720 to 1840 in that push right there, because at the end of the day they moved so much more violently at the end of the day, because you're buying at the money or in the money, and a dollar move on SPY will triple easily, or double or triple. So but yeah, I mean, you get the red move right, the red candle right here. Everyone loaded puts, then it just popped it more. And usually you see the opposite. You'll have a bunch of red candles, and they'll put in a green candle thinking the bottoms, and then they'll just flush it more. FOMC, you cannot knife catch. You cannot guess the top, because they always make a fake bottom, a fake top, and they end up flushing more or squeezing more. So you get a FOMC is a different animal. Throw everything out the window, because it doesn't matter. You cannot do that with FOMC, and you can't go based off resistance levels and support levels, because it'll flush right through them like it's nothing. So you just got to be very, very, very careful on that, and just play the momentum. Now on Thursday, traded A's room. I said SPY puts into 412. Which was right here, pre-market low. It didn't do that. I did play puts with the first red candle form. As soon as I got below the lower day of the next 10-minute candle, that's where I grabbed the 41.40 puts at $9. And they went from $9 to $10.60. And it popped back up. Then it came back down. When it came back down, I grabbed the 41.40 puts again at $8.60. And they went from $8.60 to $12 on that right there. So you can see, got red 10-minute candle, bought the next lower day on the next 10-minute candle, got a nice little play on that. It popped back up when it came back down and broke this area again. That's where I reloaded and got another second play on that. So got two good plays right off the bat in the first 15 minutes. Then it took calls at 10:30, which is right here. You can see it drop down. We got this big green candles right here. Just wiped out all this. Recovered all this. Once it got over the 414.65 area, that's where I grabbed calls. I grabbed the 41.70 calls at $8. And they went from $8 to $19.50 in that push right there. So that was a nice strong move. Then I ended up grabbing puts at 11.17, which is right here. Got this push up, got a top tail candle, didn't break high day. When it broke below these two candles right here, underneath the 416.30 area, or 35 area, I grabbed the 41.70 puts at 8.10, and they went from 8.10 to 9.70 right there. Got a nice little drop, came back up and dropped again more right there. 11.17 is where I grabbed it right here. So we got a nice little play out of that. It bounced off, well, I didn't really get to it, but it came close to the 20 EMA and it bounced off from it. Now, when you're using the moving averages are indicators of support and resistance, most of the time it touches, but a lot of the time it comes up short or overshoots. You got to anticipate that sometimes it won't touch the moving average or PDC or ICT or whatever indicator you're looking at or VWAP. It may come up short, may overshoot it, and it will end up making sense afterwards. But sometimes you just get it. You can grab it early. You can wait and see what happens. But sometimes I like to grab it early. Sometimes I like to wait to see if they overshoot. But I didn't touch it until 12:57, which is right here. Yeah, right here. I didn't touch this. I thought about it. I remember talking about that, or looking at that, but I didn't touch it. I thought about buying calls right here. In fact, I think I did buy calls right there in the challenge, or right here. I don't remember, but anyways, I'm not going to talk about the challenge. I don't cover that. But anyways, 12:57 right here. I mean, it rejected high day here, here, and here. Then when it quickly dropped and bounced off the 20 EMA for the second time, it quickly came back up to higher day. This is what I'm talking about. It rejects it, drops, and quickly comes back. I bought it this time when it got over the 416.80 area. I grabbed the 41.80 calls at 8.70. And they went from 8.70 to 11.50 in that push right there. So got a nice little play out of that. So yeah, 12.57. Yep, right there. I probably grabbed it right there in the challenge. I'd have to look at the challenge to see what I did, because I did grab it on Thursday. I didn't play the challenge until Thursday. I either grabbed the challenge play here or I grabbed it down here. I think I grabbed it here, because I definitely would have got a better play down here. Because I think I remember after I grabbed it here, I was thinking, okay, if I have waited a little longer, I could have got a nice little play right here. Then I ended up taking the challenge play down here, I think. And I ended up taking a loss on a pretty big loss. So, but well, like I said, I don't cover the challenge plays. Okay, that was Thursday. Friday, trade areas room, I said SPY calls over 412, which is right here. You get this massive drop. Whenever you have these drops going into open, especially these big drops, what ends up happening is that This was a news drop, and everybody's like, okay, the news is bad, we're going to flush. Then when the market opens, everybody piles into puts right away. And when they pile into puts, it just squeezes on them. Then I'm just like, okay, what just happened? It's just me. Whenever I see this, I always think, okay, they're going to squeeze people at open. And that's what ended up happening. So it dumped, and it stayed underneath 412, and I used the 412 area right here. I could have grabbed it right at open. I probably in fact, I think I was thinking about it, but I didn't. I waited for the first 10-minute candle to form. Then once the first 10-minute candle formed, I grabbed calls, new higher day on the second candle. I grabbed the 41.65 calls at 880, and they went from 880 to 1140, so I got a nice little play out of that. Then it pulled back. Then I grabbed calls at 1012, which is right here. Pulled back, bounced off VWAP, the 20 EMA, the 200 EMA, and once I got over the 414 area, that's where I grabbed the calls. I grabbed the 41.70 calls at $8, and they went from $8 to $15 in that push. Then I grabbed puts at 1038, which is right at PDC. I grabbed it right before. This is what I was just talking about. Sometimes it doesn't always touch. It will undershoot or overshoot. In this case, it undershot by what's the high of this candle? 70. So it undershot by 8 cents. So once it got over the 416.50 area, that's where I grabbed the puts. I grabbed the 41.60 puts at 760, and they went from 760 to 1150. Now, a lot of the things that people do talk about in the room is that I look for a reaction. When I'm looking for a reaction, it's usually a one-time thing. And once it does react, I don't like to reload. I mean, I could have right here. I could have reloaded and got a nice play. I could have reloaded right here. But to me, I was a little skeptical. We had the nice, great reaction. I didn't want to reload. Then when it got back up here again, I was thinking, okay, we were going to push through higher day. And in fact, when I did grab puts right here, got that play right there, I did grab calls at 11:15, which is right here, because I was exactly thinking this. It dropped. It quickly came back up to higher day. This is where I grabbed calls right here. I grabbed the 41.85 calls at 850. It dropped a little bit, then it popped right through. Then I ended up selling it. They went from 850 to 970. Once it pushed green, I got out. Good thing I did, because it flushed right afterwards. But this is what I'm talking about, that we get to the PDC. I got the initial reaction, which was the pullback. Then when it quickly came back to it, that's when I grabbed calls, thinking we were going to push green. And technically we did, even though we didn't close over it. We dropped a little bit and we pushed green. But once it got green, it got flushed. I didn't grab puts until, actually I grabbed puts right here. Yeah, I did grab puts, but I didn't grab it right here. I grabbed it right down here. Boy, I traded a lot right in here. So I got the reaction here. Then I got the new higher day right here that ended up working. Then when it flushed right here, obviously I sold when it went over PDC, like I said. But when it came back down underneath the 415.60 area or 70 area, that's where I grabbed the 41.60 puts at 920. And they went from 920 to 1240 in that push right there. So got a really good, some solid plays out of this area right here. Just a lot of solid trading on Friday. We caught the pop here, pull back. We caught this pop. Then we got the initial rejection right here. Reaction to PDC, we got that. Then it quickly came back up. I grabbed calls. Then it went to over PDC like I thought it would, but I actually thought it would rage more. I didn't think it would just pop over and be a fake out. I actually thought it would continue raging, but I did get out, got some nice money out of that. But when you had this nice big red candle and it got below this area right here, that's where I grabbed the puts for another good play. Some solid trading right there. Nothing I did right here I wouldn't have done again and again and again. I really liked what I did here, and I'd continue to do it. I like seeing plays like this. I just don't like chasing nonstop things. I wouldn't have chased here, and I wouldn't have chased here. So once we got this play and it started getting overextended, I saw this candle. I didn't want to touch puts right here. I wanted to wait. I had a feeling they were going to push it to PDC, and because whenever SPY gets really close to previous day's close, they like to try to push it green, and I just wanted to wait for it, and I just did. But once it got over to this area, that's where I just grabbed it early. So definitely pleased with the way the week went. Wouldn't have changed really much of anything except that one I averaged down at, I think on Tuesday. Probably shouldn't have done that. But anyways, either or, I would have probably only taken one loss. I didn't really need to. But great week. Strong month, strong part of first part of the year. Hopefully they continue that. And that's going to do it for the recap. And thanks for watching.